Good evening, Lautaro. Hope you're doing well. This is Ryan with TrendLizard.com. Got your email with the three tickers I'm going to take a look at for you. Don't think, well, we might have done a look at TNX before, the 10-year U.S. Treasury Yield, but don't believe we've taken a look at the other ones before. GVX, which is the Livestock Index, and then GYX, which is an Industrial Metals Index, as you know. But let's take a look at them. So with TNX, first thing that jumps out to me, we got data dating back to 1980. Obviously, it's been in a huge downtrend basically since then, but obviously a very big change since then. Pretty much steady during the course of those, 30 years, 40 years, I guess. Lower highs, lower lows, ticking its way down into that spike low in 2020. And then it set a higher high, basically. I mean, there's a little bit of a higher high here, but this is truly the first real break from what's been happening. It's been in a downtrend channel, lower highs, lower lows, and then you get this throw over below that channel and then the spike higher. So it seems like something important changed, obviously, in 2020. What we can't do is look at this action that we've seen over the last 40 years and find any type of sensible Elliott Wave pattern. Pretty much every step of the way, there's overlap. Every step of the pattern, there's just no possible way. If we have a 40-year pattern here that overlaps at every critical step, that we're going to be able to label it. But obviously it's a downtrend. I mean, it's moved from like 160 down to whatever this is, 5 or something like that. So it's been a massive decline. Obviously it's a downtrend. It doesn't label as a trendy move. It is what it is. We have to pick up at 2020 and focus what's happened to the upside here, so we can figure out if there's something that we can apply to this that makes sense. So let's go ahead and do that. This takes a look at that recovery, started in 2020, and this is my best take on it. We have a nice up leg here, 5-wave move, a larger pullback which fits as wave 2, another nice up leg here that's subdivided is still a trendy 5-wave move, and then completed in looks like October of 2022 and has been pulling back since then. So to me, this looks like a 4th wave correction. The question we are asking is this 4th wave over and wave 5 has begun to give us another multi-month up leg, or will a larger pullback form first? So let's go ahead and zoom in on that action. One possibility would be that the 4th wave completed in February, and we are getting some trendy upside action in February. So the potential would be that maybe that's the start of the 5th wave up. Another possibility would be that trendy up leg is actually the B wave, the C wave of wave B, A, B, C for wave B, with still some downside action. A larger pullback would make more sense to me, I think, on a timing perspective. This is fairly small relative to this, and 4th waves are generally larger than 2nd waves. But I guess we'll find out. I think either way, the more important takeaway is that this downside action is corrective. Whether you look at the form itself or look at how deeply this recovery has retraced this downside action. So I think that's the bigger takeaway. So overall, you have to expect higher prices one way or the other. It's just a matter of timing. And I think either way, you would need to see the completion of this 5-wave up leg and a larger correction if you're looking for an entry point. I don't think you'd want to just jump in, especially a move that looks fairly extended on the short-term time frame. You would want something larger to the downside. So I think once you start getting something larger to the downside, see if that move can stay above 36.25. If it does and it begins to turn higher, I think it greatly increases the chance that a 5th wave advance has begun. This is probably wave 1 of that move, and it becomes tradable, at least as far as that 5th wave up goes. If instead, you see more notable downside action, a move below 36.25, obviously pretty far away. But if that's what happens, or you see any kind of trendy downside action, then I think you're back into this larger 4th wave. And, obviously something that would probably at least go back to the low, potentially lower from there. Just going to run a quick Fibonacci retracement on this guy. If we went from the start of wave 2 to here, obviously the potential is that it could get much larger. 4th waves don't always get as large as they could, but that potential will exist. So that's something to be aware of. So I think that's what we're looking at. You wait for a larger pullback from that February up leg, but the larger, bigger takeaway being that this is a counter trend down move and that we should get a fifth wave up at some point, to complement wave 1, wave 3, and then a fifth wave to the upside, either now or after that larger fourth wave. So there is that one. Let's shift on over to GVX now, and that is the GSCI Livestock Index. Data dating back to 1996. A nice up move from about 140 up to about 420. Best way I can find to label it is shown here. It looks like a massive leading diagonal right here. I'm not sure how else to label that. Second, third, fourth, fifth wave. Trendy upside action, however you want to label it. Then you get this larger pullback here that retraced more than 61.8% of that up leg. So obviously it's kind of a resetting type, larger degree pullback to the downside. And now you get that strong upside off of the 2020 low that's been fairly steady to the upside. So kind of a similar type deal. This looks like a counter trend down move. The question is that counter trend down move over, or will a larger move form? So let's go ahead and zoom in. One possibility is that you have that A, B, and C to the downside, and everything off of that 2020 low is a 5-wave move in progress with higher prices to come. This isn't the easiest labeling to swallow, just because, for one, this down leg here from 2019 to 2020 looks like a 3-wave move. We're just putting the high to the B wave here. Kind of funky, but also that would be a pretty short C wave relative to the larger A wave. Obviously that can happen, and we have actually seen that a decent more lately than it seems like we have historically, so not loving that trend, but it is what it is. And this truly does look trendy. But the other possibility, something similar to like the last one, is you have the A and all of this action is wave B. The reason you would consider that, despite this incredible size of this up leg, is that 3-wave move to the downside here fits better as a B wave. So A, B, C. Still not super clear. Honestly, in reality, this seems like a better explanation just when you talk about what are we talking about? A 3-year up leg here? 1, 2, 3, like basically about 3 years. Generally, we don't see that as the C wave of a larger B wave. That's a pretty big, substantial uptrend. So I think that has to be taken into account. So it takes a move below 250. Obviously, nobody's waiting for a move below 250 to get any clear sign of this, but that's the line in the sand that would say that we are getting that larger pullback. So let's go ahead and zoom in. I think the best way to really approach GVX at this time is to just focus on what's ahead of us, or what's directly in front of us, I guess is a better way to say that. What's clear is that the pullback in 2022 is a counter trend move. It's been completely retraced by this strength here. But then if we look at the strength here off of October's low, it's pretty clear up to a point. You have a trendy 5-wave up leg here, counter trend ABC move, and then this up leg. So currently, this recovery is a 3-wave move, right? So if it hits its head here, turns back below 355, it's going to be tough to make a case that this up leg here is trendy. It's going to look more like a 3-wave move. If it becomes a 3-wave move, we get below 355. You're going to have to expect it to head all the way back down to October's low, basically the formation of a larger correction here. Excuse me, got a little under the weather. So I think that is kind of how you play it. I think in this respect, you have to expect higher prices overall because this is a counter trend move, right? To the downside, it's been completely retraced. The bigger, more pressing question is, has the uptrend resumed? And if it has, it would make sense for it to stay above 355. So I think that's a fairly tightly controlled scenario there. If it breaches that, looks like a move back here as a larger fourth wave completes, and then price turns higher from there. If it doesn't, it can head directly higher from here with the potential for another, or for this fifth wave to grow and get larger from there. So that's my take on GVX, the Livestock Index. Let's go on now to GYX, the Industrial Metals Index. So data, again, dating back to 1996. Had some good upside action, and then for, I don't know what, looks like a decade and a half, basically, it gave us what fits pretty clearly as a triangle pattern, A, B, C, D, E. off of that 2020 low. This guy exploded to the upside. I think we all remember what happened to prices of this type of thing. Kind of post-COVID, got a little bit crazy, really spiked up, but looks like a pump and dump on an industrial metals index, which is pretty wild all into itself. But to the upside, clear 5-wave move, followed by a sharp reversal that retraced more than 61.8% of this up leg here. So the suggestion being that this is something more important to the downside. So let's zoom in and flesh that out a little bit. This looks at that 5-wave move to the upside off of the 2020 low, and then that retracement pretty sharp, and then just kind of some choppy mess off of the 2022 low. So let's zoom in again. Here's that downside action off of the 2022 low. Looks like a trendy 5-wave move, and looks like a move after that trendy 5-wave down leg completed to be some counter trend, choppy, messy action to the side, sideways. So looks like trendy counter trend action, suggesting that a larger pullback is coming. It's possible that we get a larger counter trend recovery that moves into this yellow area, but as you're about to see, it's not necessary. What we know is a move below 427 adds more to the bearish look because that confirms the counter trend nature of this up leg as well. So if we zoom in, not sure why it's doing that to me. We look at that up leg, basically this guy right here. Closer, it looks like a trendy 5-wave move, which could be the end, right? A, B, C to the upside, and that could be the end. What we'll see here is if a high is in to this recovery, it'll stay below 475. And again, if it continues down between below 427, then that's going to just add more to the counter trend look of things. If it does get above 475, then we start talking about a larger recovery into this area. But by and large, we have to be bearish on this guy. This breakdown retraced more than 61.8% of the up leg. It's trendy. This stuff is counter trend movement. All these things add up to point lower. So I don't think you can be bullish on this guy. I mean, maybe you could try to trade it up here if it gets above 475. Pretty dangerous game in my view if we're getting trendy downside action and counter trend upside action. I would much rather be on the trendy side and just wait for some indication that things are going back down, and then it becomes a shorting opportunity. So, and essentially, as you know, you get a big down leg like this, you get the counter trend action. You're looking for another big down leg, something like this. Not always as big, like I was referring to before. We seem to be getting small C waves, which is a terrible development. That has really never been the case. But nevertheless, we would expect a size of similar magnitude to the downside as we got back here in earlier 2022. So, Lau Tarot, always a pleasure, man. I hope you're having a wonderful weekend, and I will talk to you very soon. Take care.